Well, it's very encouraging that pig prices have recovered. The pig prices were recovering due to market supply and demand factors in March, April, and then of course back end of June we had the Brexit vote, which immediately had the effect of weakening the pound against the euro, making our exports much more competitive, and that has leveraged even more increase in the pig price, which I say is very welcome. On the other hand, the weakening of the pound has meant that feed ingredients such as the ones particularly that we import, such as soya, are increasing, and that's a note of concern really. Well, yeah, I think it's been a boost for the whole industry, but that's down to the euro-pound exchange rate. Longer term, of course, Brexit, as far as I understand, it was built around trade deals being done outside of Europe and with Europe. But what is quite apparent nowadays is that trade deals can be positive and they can be negative, because that these deals can be easily withdrawn, such as our exports to Russia were withdrawn 2.5 years ago. That had dramatic impact on the pig price particularly in Europe, which impacted on our price, and more recently of course we have this discussion, shall we call it, about the Chinese involvement in Hinkley Point. If we fell out with China over Hinkley Point, who knows what might happen to pig exports to China. And it seems a strange old situation where these things have so much impact on a pig producer's profit and bottom line, and we have absolutely no control over it whatsoever. Well, the pig price per se is not the key issue. It's the relationship between the pig price and feed price, and right now that relationship is positive, and by that I mean most pig producers will be making a reasonable margin as we speak. The concern, if you like, is that with a weakening pound, feed prices will increase, and that margin then gets tightened even more. In terms of the pig price, I think there's probably still more to be had in the pig price. I can't see it reaching the heady heights of 2014, but as I say, as long as that relationship between the pig price and the cost of feed remains as it is today, most producers will be reasonably happy. But I think there's still a lot to do. There's a lot to do around trade negotiations, around Brexit. As an industry, I think we need to invest a lot more, both in production capacity and in things like new product development, because pork is still seen as very old-fashioned meat, and we have to get it up there with poultry meat, chicken, to make it really liked by consumers. Well, I think historically pig producers haven't been supported by government in terms of subsidy. We've never really sought subsidy, but I think given the opportunities which Brexit presents in terms of reviewing the whole of agricultural strategy and policy, I would like to think that there will be some place somewhere for government support for investment into new facilities, because a lot of facilities in the UK are in sore need of renewal or refurbishment, and to get some incentive to do that would be most welcome. The only thing that's happened in recent years is a withdrawal of the agricultural buildings allowance, which was a tax relief, a small tax relief for new buildings, and that was a real kick in the teeth. So I think we'd like to see that reversed. Plus we'd like to see some other supportive messages coming from government. I think there's still a significant demand for high welfare pork in the UK, and what the UK can offer all the consumers in the UK is a choice. They can have free range, organic, they can have outdoor bred, outdoor reared, or they can have indoor produced at least cost of production. So the consumer in the UK is probably unique in that the absolute breadth of choice they have in what they can pick up off the supermarket shelf.